Mondays are long days for me. It's so long, it's Tuesday. Mondays are done. Anyways, 3, 2, 1, hit it! Boom. Yes, everybody, I hope you're safe. I hope you're healthy. I hope all your loved ones are safe and healthy too. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Luca, they shut down your university? That makes sense. Good morning, everybody. My name is Wayne. I'm a currency trader just like you. Thank you for being part of the Forex.Today YouTube channel community. Thank you for being respectful. Thank you for your participation. Thank you for your thoughtful questions. Thank you for posting comments. Thank you for subscribing. Thank you for working hard every single day to improve your profession. I am honored to be a part of your journey. Now, if these webinars every single day are helpful to you, this community is sponsored by tradersway.com. Make sure you pay it back. Show your loyalty and respect by visiting tradersway.com, opening a demo account, download MT4, place some trades. You'll see the spreads, the execution speed, and you'll see the swaps. The swaps are awesome. The execution speed is fast, and I've tested that with a third party, and the spreads are very competitive. Give them an opportunity to earn your loyalty and respect. Open an account with tradersway.com today. What else is going on? Oh, the support group starts today. So, as we discussed yesterday, up until now, the swing trading group got a swing trading course, and once a week on Thursdays, we would meet to set up trades for next week. So we plan 2, 3, 4 days in advance, and we take trades 100 to 300 pips each. That's what the swing trading group does. I've now given the swing trading group the day trading course and all the day trading tools for free. No extra. Now, because of the virus and people are freaking out and the markets are crazy, I feel like I want to be in your life even more. I want to help you even more. I want to be here for you, to support you even more. So now we've gone from 4 meetings a month to 40 meetings a month. 40. We went from 4 to 40 meetings per month. 10x'd it. And I have not increased the price. So now we meet every single day, twice a day. London close, Asia open. Plus, I'm here for you in New York. So really, you get New York, London, and Asia. The day trading course, the day trading tools, the swing trading course, and all the live meetings. And I haven't increased the price at all. So I think that's pretty significant. I hope you think it's pretty significant. I hope it entices you to think about joining. Okay? Okay? I hope you think about joining. And I don't know about you, but I believe 40 hours of my time is worth something. So I'm offering that extra 40 hours of my time per month at no additional cost. So I'm doing my best to help, guys. Go to swing.fxbootcamp.com. If you can't do that, it doesn't matter. Look, I'll tell you, it's less than $5,000. Okay. Does anyone in the swing trading group recommend other people join? We'll let that speak. Yeah, I think so too, Jean-Guy. I'm just trying to do what I can do. That's all. I can only do what I can do. So I'm doing that. Yeah, one person that joined yesterday, they're like, holy crap, I watched the videos and they're amazing. So like, cool. I love that feedback. Also, someone emailed me the other day. They're like, dude, I've done so well recently. I'm so happy. I'm so everything. So it's really cool. So I love the feedback. All right, cool. Enough with that. I'm exhausted, by the way, so I don't know how much sleep you're getting. Oh, I can't rub my eyes, but I've been carrying this around. I even had it in New York. I got my spray, whatever you call that. Cool. So, trying to get sleep. I'm tired though. Amazing, right? Great. MoveOn.com. So, we got a stimulus. Yay! Yay, stimulus. So, how could we take advantage of this? Well, one of the things you have to decide now, whether you use fundamental analysis, technical analysis, or a flip of a coin, doesn't really matter to me. What you need to start doing is deciding whether we've hit the bottom or not. Okay? Okay, that's it. Do you think this is the bottom? So like euro yen has actually printed a double bottom. How about pound yen? Yeah, sorta. How about this thing? Sorta. Aussie? No, it's definitely not a double bottom. But at some point, you got to make a decision. How low can you go? Right? Reckless, I'm joking. It's not even, it's, the swing trading course is not a lot of money. So, but it's funny when people, I don't know, they don't even go to the site. So it's less than $1 million, right? You know, it's like in statistics that, you know, some people are like, we want to improve the certainty. Like, why within 5% accuracy? Why not 99% accuracy? All right, well, there's a 99% chance that you're not going to get hit by an asteroid today. You're like, well, that's not helpful. Yeah, well, so anyways, just go to the damn site. It's not a lot of money. It's not a lot of money, dude. Honestly, you'd pay a golf coach significantly more money than that. So it's not, money shouldn't be the issue. It shouldn't be. All right, so anyways, decision-making time for you. So let's pick one. Will the stimulus out of all the central banks around the world, but in particular the United States of America, that's the big one, is this enough to create a bottom for, let's say, euro yen? Now, euro would, bullishness would just be euro recovery, or it could be yen weakness based on risk on, or the third variable is it has to do with dollar. Now you're like, but we're not looking at dollar. I know, right? If the dollar weakens because of the stimulus package, which is something you would expect to happen. Okay? You understand that? If the stimulus package is good for America, it will weaken the American dollar. I know it's hard to get your head around that, but trust me on that. If the dollar weakens, where does it go? I mean, it weakens because it gets spent. It gets spent internationally. Well, the most liquid currency in the world, most liquid currency pair in the world is euro dollar. So dollar weakens just by the fact that the dollar weakens, the euro has a high probability of going up. And if the euro goes up because of the dollar weakening, euro yen might go up. And there's a correlation within risk on that if the US dollar is weak, the yen will be weak too. Or at least has a high positive correlation of, I'll make something up, 0.89, okay? If you need the actual statistics. So it's interesting, right? This might go up because of the US dollar, but you have to make that decision. So let's kind of take a closer look here. And if you were going to play this bottom, you would have your bullish day trading template. And these are your buy zones. Every day for the last week, you've been a buyer off the double bottom. Buy, buy, uh-oh, buy, and then tomorrow's buy. And this would really help you because then you'd start looking for tomorrow. See, like I said, we're already done today. This is today's day trade. And this is what we'll set up in the Asian session, guys. When I do the Asian session now every day with the day trading, swing trading group, I don't know what to call it, with the COVID-19 traders support group, that's what we're going to do in Asia. So I'll be there at the Tokyo Open with you guys. We'll probably catch Shanghai, or at least prepare to have Shanghai. And of course, now look, if you're thinking like, hey, Wayne, I want to join the group, but I live in London and Asia is in the middle of the night for me. There's no way I'm going to get up. Well, you got to think about it this way. When you do wake up in the morning, you'll have this trade plan sitting there for you. And it'll say things like, oh yeah, pull back into here, we'll be good. Okay? And so you'll show up just in time, hopefully. So anyways, we would plan that out in Asia. So there's a particular trade, and now the next one will probably be like that. Okay? The big caveat here will be the psych level of $1.20. Is that going to be, are there bears sitting and laying there and wait? Yeah, maybe. But that's why we use technical analysis. So if you see something like this, whoa, whoa, whoa. Okay? So be careful. The next 100 pips are kind of tricky for a bull. That's why you got to use your support and resistance. So hopefully it doesn't go all the way down to 50, right? You'd rather have it stay above 80. But, you know, that's legit. That's 119.50. Okay. Cool. Okay. I'm going to skip Beast because of the news. And let's take a look at this. How do we want to treat this? Yeah, we'll get to Bitcoin, Johan. Okay. What do you want to do? Treat this as a bear? Well, we're in a step up mode on this time frame. So it's not very bearish, but we're still in a down channel if you can read this, right? From here to here to here. Another way of looking at it is from this period, okay? And then this thing is measuring sort of a period in here. Well, no, I guess period from somewhere else. Okay, one standard deviation. Anyways, so some people may say this is still bearish, right? We know we're looking at the two moving averages to distinguish bearish market or bullish market. It's technically still bullish, but we've even breached the 55, so I'd almost call it neutral. But that might be very interesting if you're a bull. So bulls might be analyzing the charts from their point of view, and it would look more like this. So let's drop into a 1 hour, okay? And you can see mixed all over the place. This was your buy zone, but you would never have bought that. Maybe, but no, almost for sure not. Almost for sure not. Maybe you bought this one. This one kind of probably messed with your mind a little bit. And now we're up here, and you're like, well, you probably missed that move. And so this is all over the place. Keep in mind that during this period here, the central bank cut interest rates and introduced quantitative easing for the first time. So that's why you got sort of mixed signals there, and that's what you should be careful. Okay. Oops, didn't want to do that. Okay, click, click, click. Aussie. Okay, same sort of thing. This is probably the last one to go bullish, but that would be important information, right? Okay. So what do we know on the daily, though? The daily, this is waiting for a pullback to the 21 and then down, right? And not where the 21 is today, but where the 21 is in the future. So what are we going to call this? 66 and a half? 66, 66, maybe? Something like that. See, it's a moving target is what I'm trying to say in English. Okay, that's the moving average in the future. So what would you do now? And, you know, that's what a trend trader would want. So if you're still a bear on this, that's what you'd be planning. Is this helpful, guys? This would be like tomorrow's trade. Benjamin asked, Wayne, what will be the impact of oil if tomorrow or Thursday we have catastrophic weekly jobless claims? Well, oil is not trading fundamentally right now at all. So, who knows? But this is not fundamentals. This is not supply and demand economics. Oil prices have to do with a price war. All right, cool. Thank you, guys. What's up, Barry? I don't think, was there a limit order? No, I'm in it. Where is it? So I'm a little off. I was break even an hour, 2 hours ago. I was break even. I'm looking at a roll reversal here. There's the entry. Pretty easy, right? Highlander says, what's going on with the peso? All right, well, let's check it out. See what's going on. So I've been watching it from this point of view, and you're like, it's crazy. I don't see any craziness here. So why don't you refine the question a little bit, Highlander? Because it looks like it's just riding the 21. It's like just easy. Buy, 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 buy. Guess what's happening right now? Probably a buy. South Africa's in lockdown from Thursday. Right on. That's good news. Oh, Jonathan, you don't have to click a link so traders know you came from my videos. I don't make money from you. I'm not an introducing broker. So if you open up an account and trade $1 million tomorrow, it doesn't impact me whatsoever. Just open an account. Yeah, but I appreciate that. I know what you're doing. You're trying to give me credit, and that's cool. Yeah. Just think of it this way. They've asked me to help you guys become better traders. That's what I'm charged with doing. That's it. They want you to succeed. So anyways, going back to Highlander, I'm not sure what's going on here, but this seems pretty basic. especially in a risk-off, risk-off scenario. Dollar strengthens, emerging markets get crushed. Yeah. Anyways, I don't know what you mean by wild. It's gone wild. It looks like a toy boat floating in a bathtub. Right? Okay. Yeah, I mean, that's one of the things that we've actually been doing in the swing trading group for a while is I'm showing that even though there's extraordinary events and extraordinary moves, extraordinary news, average daily ranges have skyrocketed, right? And it's easy to say something like, oh my God, the peso's gone wild, right? Highlander, sorry to pick on you. I don't mean it personally, Highlander, but it's valid. You threw it out there, right? And we used to hear that. Well, I heard it a little bit about 3 or 4 weeks ago, at the beginning of one of the swing trading group meetings, and I shut that down immediately. And I say, well, let's look at the facts. What do we know? So we're looking at this currency now, right? The USD Mexican peso. Okay, what do we know? Well, technically it's bullish. Okay, and so last week the buy zone was here for a swing trader, and the target was here. And all of a sudden it's like, oh my God, that's technically perfect. That's textbook. That's exactly what you would expect in a situation like that. And I'm like, okay, so maybe the speed of which you get there, or the range is greater than normal, but it's not freak out, the sky is falling, end of the world, everything, it's not wild, it's not crazy, it's not out of control, it's not unpredictable. You're like, oh my God, it's actually, right? So a swing trader would look at this and say, oh, it's so OP, so, you ride the 21 on the 4H. I mean, all of a sudden you're like, oh my God, this is actually a little bit boring. It's not wild and crazy. It's textbook. It's exactly what it's supposed to be doing. Okay? You know what I mean? So that's all I'm saying. Not that our emotions are wrong. That would be silly. What I'm trying to say is, if you calm down a bit, look at your strategic charts, meaning your 4-hour and your daily, back yourself out of the news, back yourself out of the 5-minute chart, back yourself out of what's going to happen for the next 2 hours. That kind of mindset's going to get you into trouble anyways, especially like this. But if you back it out and do strategy first, you guys remember the name of my book? Strategic and Tactical Forex Trading. So if all you're doing is tactical, you're getting crushed. You're going to be destroyed. You're up and down and up. At best, you're probably break even. Or you might have made a ton of pips, but if you're purely tactical, you're going to give them all back anyways. So you're going to make a whole bunch of pips last week and then give them all back this week, and nothing happened. You're your own zero sum, so to speak. So if you back yourself out a little bit, and instead of being all tactical, if you back yourself strategically, you're like, oh my God, there's a lot of calm inside of this chaos. Okay? There's a lot of predictable, identifiable, repeatable, recognizable setups in these trades if you look at it strategically first before you start throwing trades down. So like, this is a 21.55 cross up. Fundamentally, the dollar should get strong. Fundamentally, the peso should get weak. And if you read my book 13 years ago, it's like in this scenario, you let it come up, let it come back down to the 21, buy the 5A cross up. Let it go up, let it come back down to the 21, buy the 5A cross up. let it go all the way up. Okay, let it come back down to the 21, buy the 5A cross up. All right, and right now, you're planning on buying the 5A cross up again. And all of a sudden you're like, oh, well, that's extremely normal. Yeah. Inside of all of this chaos. Okay, that's what chaos theory is, by the way. Okay, the chaos comes from so many variables that it seems impossible to recognize any sort of logic, but then there is patterns inside the chaos. That's what chaos theory is. So if you find you're stuck in chaos, you're zoomed in too much and you're stuck inside of the variables. All you see are variables and you can't make sense of them. Back out and start with the strategy first. That's what it's all about. Have the strategy first. What does the 4-hour chart tell you? And once you've made a decision, now you drop in. And now it makes sense because now you're only looking for bullish patterns or bearish patterns. But without that strategy first, it's just going to look wild. It's going to look like chaos. It's going to look like it's out of control. And the media is certainly going to emphasize that it's out of control. Okay? So that's all. Remind yourself you got a strategy. And that's what we'll do in the group over and over and over again. Make sure we got our heads screwed on straight. That we're calm and focused, ready to do our job. Okay? Is that right? You should show me that. That's interesting. You got a hacked version or something. So anyways, what should we do? Swissy pairs. Oh, I got knocked out. I got my 600 pips yesterday. So mad. Okay. Yeah, baby G, the 5 and 15 is great if you have a day trading strategy. If all you're doing is essentially scalping, then you're going to be very inconsistent. That's the whole idea. The idea to day trading is increasing your consistency and lowering your volatility. That's the idea. Right? And if you get those two things correct, you're going to make money. How much money and all of that is irrelevant, but you should be able to make 100 pips on a day trade. If you can't make 100 pips on a day trade, your strategy is flawed, or the market conditions are not favorable for day trading today. Wait till tomorrow, for crying out loud, right? So that's the thing. Like, especially with newer traders, they can't fathom 99 pips. I'm like, 99 pips? Your trades aren't even worth 99 pips. You're like, no, they're worth 12. I'm like, oh my God. Right. So we got to get that fixed, usually, right? Yeah, Adrian, you have to realize the two major variables on how much money you're going to make is how much money you started with. Okay, Adrian, so you can't change that. That's fixed right now. So you're starting with $1,000. Okay, and your average return over time. So you could do it this way, Adrian. And this is important, by the way. If you guys know how to use a spreadsheet, okay, open up Excel and start planning and calculate it. If you started with $1,000 and it increases by 2% per month, compounding, of course. Okay, 2% a month. You should be able to figure out how much money you'll have in 10 years. So the point is, once you know how to trade, your returns will become more consistent and stuff. So the two variables that, well, I guess it's three variables then. The three variables that matter to how much money you make is how much you started with. That's your assets under management, because it'll grow. Your average monthly return, okay, and how much time. And the big thing that people often want to cheat is time. So they're like, Wayne, I don't know what I'm doing, but I need to get rich, and I need to get rich quick. And so if one of the variables is time, and you're like, well, I don't have time, I need to get rich now. So you, okay. By the way, Hope, it's not 24% a year. It's compounded. So for example, if 2% was $200 in month 1, it might be $300 in month 12. So it's compounding. So it's more than 30% a year. Right? You see what I mean? And all of a sudden you're like, damn, 30% a year consistently makes you one of the best professional traders in the world. I know, right? Benjamin, the more important thing, Benjamin, is people just do it themselves. Okay? Is that what it is? All right, closer to 30, but not 24 is my point. Okay. So anyways, right? Baby G says, Wayne, as a bear, do you refrain from placing a day trade after prices breach to daily? Do I refrain if it breaches? Not necessarily. Okay. If it breaches and then comes back, I might do something like this. So let's say today worked out like this. Okay. Would I take the second short? Yeah. As a day trader, am I selling up here? No, sorry, not interested. Thank you very much. Thank you anyways. Thank you for the opportunity, but no, not interested. So what we would be doing now is setting up this. Okay. Does that help, Baby G? Yeah. And of course, your weeklies supersede all of that too, Baby G, right? So let's go to, instead of a day trading plan, we have a swing plan, okay? And take a look at that, okay? So as a swing trader, right, this is a sell, okay? So as a weekly, you would have taken this, but not as a day trade. Now, tomorrow's day trade is going to trade the breach of this area here. So it's going to look something like this. And that's what's going to happen tomorrow. Why would you ask me a question like that? I don't know what other people think. I was buying wine 2 days ago or yesterday. I can't remember. I was buying wine recently. And first of all, I'm an economist, so I said, hey, so how are wine sales? And he said, wine sales are up 14%. All right, you might be dying, but people are buying wine. Now, the next thing is he tried to tell me that the coronavirus is being used by the Democrats to get Trump not reelected, get Trump to lose the election, and that it's a conspiracy. And then I glazed right over and I'm like, hey, well, do you have any super sales? And he apologized for getting political. So anyways, so it's out there. This is the kind of stuff that people think, but I don't know. So Vegas, it was up quite a bit last year, but now not so good for March. Well, ask yourself why. Were you betting against the obvious? I would I would focus on that, like the why. I mean, when the global economy shuts down, dude, you buy Swiss franc, you buy the dollar, you buy Japanese yen. How could you miss that, right? So I know you know that, right? I know you know that. So ask yourself the tougher question. Like, don't get all insulted and pissed off and stuff. Just ask yourself the tough question, like, why did you miss it? What went through your mind? I mean, at some point, the technicals had to kick in. Like, where did it go wrong? Like, March should have been one of the best months in your trading career. All right. How many trades did you guys see me take that made 500 to 1,000 pips each just in the last 6 weeks? Right? I don't often take trades in front of you guys because people just turn off their brains and they just start looking for signals, right? But we went through and we created several very detailed trade plans, right? Very detailed trade plans. So I dropped some. And what was it, 7 or 8? 7 or 8 trades? Just from coaching in front of you guys, 7 or 8 trades that I think the bad ones were 500 or 600 pips, like the one like this Kiwi Swiss franc. I just got knocked out yesterday for 600 pips, and I'm disappointed, right? So the idea is, if you didn't do well in the last period, first of all, this too shall pass. Things, don't worry about it. But ask yourself a tougher question. Okay, Vega? Don't get emotional. Try to keep it intellectual. Write things down. I feel that keeps things very intellectual. Write it down. Go back through the charts. What did you miss? Right? Why was this not a risk-off play for you? And why not? And when should you have recognized your other plan, whatever your plan was? When did it fail? That's why we use technical analysis, right? So you understand, if I'm a bear, this moving up is not good for me. If I'm a bear, that's all bad, right? So at what point should I be nervous? Well, 2155 cross is technically bullish on this time frame, right? And now we're about to kiss. So if I was a bull, should I be worried about this? Heck yeah, if I'm a bull, because the next move is typically back into the averages and this, right? So there are key technical patterns that are important on all time frames and all currency pairs, and it's important that we stay focused on our strategies and open-minded on our technicals to see when things change. And I'm telling you, it's not an easy thing. So I hope you take that to heart, Vega, that don't get all emotional on yourself, but ask yourself why, and then what can you do to prevent it next time? What are your rules of engagement next time? Reckless. When placing a trade, what would you go the amount? You want to put the least amount possible. Okay? But if you know technical analysis, you know certain things like this line 57. It's not a random line. Okay? It's not random. It's not just another price. So if you were a bear, let me put it this way. On Monday, you expected this to happen. Okay? And once again, everyone in the swing trading group knows this. This is not complicated stuff. A bear would be waiting this whole time to sell right there. It's not a random price, this 57.0000. So I think what a bear is expecting now is the up and down and up and down, if there are bears. What we don't know is if there are still bears there, but that doesn't change anything. That's still where a bear would sell. We know that in advance. You knew it a whole day in advance. In fact, you knew it several days in advance. Okay? So the next thing is, if this now does this, bears should disappear completely for quite some time, maybe the end of the week. Because this line in the sand is very meaningful. So you can use that knowledge for stop management. Okay? But when I coach people, okay, I haven't done it in years. I used to once in a while mentor somebody, right? They pay a ton of money. I work with them every day for a month. And the first thing I do is I start measuring what their actual trading capabilities, because people come in and say, Wayne, I'm really good at technicals, but I'm really bad at something else. And then I start looking at their trading, and they're not nearly as good as they think they are. You know what I mean? So then we start breaking that down, and I try to uncover their strengths and weaknesses. Inevitably, an inexperienced trader, or let's say an unprofitable trader, doesn't actually know their strengths and weaknesses. They might think they do. They might assume they do. But then when we do some work and roll up our sleeves and analyze their trades, we very quickly find out they don't actually know their strengths and weaknesses. And here's the interesting thing. You are probably a better trader than what your results show. Another way of saying that is you're screwing your own trades up. Right? And it's interesting because it's not your technical analysis or your lack of fundamentals. You're getting in your own way. And that's really interesting, isn't it? I mean, that's where it gets fun. So we fix that. But I haven't mentored somebody in years. I probably since I've been going to Harvard, so I probably haven't done that for 6 years. Well, see, here's the thing, right, Baby G? Confidence comes from consistency. And consistency comes from control. And if you don't have good trade plans to begin with, you don't have control, you don't have consistency, and therefore you'll never have confidence. And if you have confidence, it's fake. You haven't earned it properly. You got some weird, positive affirmation nonsense stuck in your brain. And what'll happen is it'll probably lead to great and deep emotional depression and bankruptcy. No, confidence does not come from experience. You could suck for years and years and years. Okay? I've seen regular people that have regular jobs, they're lame for decades. Lame. You could suck for a very long time and have lots and lots of experience sucking. So I don't think they're right. I think practice creates persistence, but it doesn't create perfection. So what you need then is control. The minute you take control, you become more confident. And then you start to see the consistency that your control has brought. Like, for example, if you can't control your trading behavior, there's no way your trading results are going to be consistent. It's impossible. You cannot be out of control, and yet your trading results are going to be consistent. Like, it's impossible. You have to have the control first. Then it comes from consistency, and the confidence comes from the fact that, 60% of the time you make money every time. And you're like, well, Wayne, that means you're wrong 40% of the time. Well, 40% of the time you lose 33 pips, right? 40% of the time you lose, and 60% of the time you make 99 pips. Yeah, guess what? Right? Guess what? That's where your confidence comes from. If you're wrong, you're wrong. Yeah, you're wrong. You're wrong often. It's no big deal. And when you're right, you make money, and you think you're going to make money more often than not. Your confidence comes from you make money on a regular basis. This is your job. It's like punching into a factory. You're like, oh my God, there's M3. I'm a bear. Sell. Right? And now you're waiting for a higher low. So if this rolls over, sell. Right? And then it makes a new lower low and pops back up. Right? And then rolls over, sell. And you're not afraid of taking these trades because you've been a bear. You were a bear here. And then you got out and let this back up a little bit. And then you took it again and again and again. And 60% of the time, you make 99 pips. 40% of the time, you lose 33. You can do that all day long. All week long, all month long, you're happy. Correct, Raj. You're buying Canadian dollar. Wayne, may I have your email address? Okay, Wayne at fxbootcamp.com. Okay. I've had the same email address for 20 years. I've had the same cell phone number for 20 years. Pretty consistent guy. So anyways, I'm trying to convey to you that you guys can do this, but you need to focus less on trading and more on your training. You should focus more on becoming the trader you want to become, not just sitting down, throwing down trades. Okay? You're supposed to be practicing. Okay? You're not supposed to be just out on the golf course hitting balls all day. Doesn't matter if you golf every single day. 20 years from now, you'll still suck as a golfer. So what you should be doing is practicing every day on how to improve your in the specific aspects of your game. Okay? That, by the way, focusing on specific aspects. So I've given this advice for like millions of times, but let's say you're focusing on recognizing a top on obvious resistance and then trading the higher low or lower high. Okay? What if all you did was look for these things and just traded those? And you did that 100 times without doing anything else, or maybe even 500 times and not doing anything else, just finding obvious places of where the market will roll over. Key pivot points are very obvious for that. Major psychological levels are obvious for that. Okay? And all you're doing is spotting consolidation at support and then breakout, pullback, and then you trade this. Or up, right? A rejection at resistance, lower low. Now you're looking for the lower high. And all you did this over and over and over and over and over and over again. Okay? Imagine you did that 250 times. And after completing it 250 times, you realize that 70% of the time you made money. Would you be confident to continue trading that? Now, why would you be confident? Alexandra, join the swing trading group. Why would you guys be confident? Well, because you're saying, well, I know for a fact that 70% of the time it works. Well, the first thing is you're measuring. I have to guess 95% of you guys don't even measure your success. So how could you possibly know your strengths and weaknesses? You don't even measure. All you say is, did I make money today? Oh, I made $27 today. I made 38 pips today. So what? So what? And if you made 500 pips yesterday, you might give back 350 today. Like, that's not, the pips are not important. The money is not important. If you want to get big, that is not important. That's like you going out hacking up the golf course and saying, well, I got a 22 over par today. Well, are you a better golfer? No. What are you going to get next time? I don't know. It could be 25 over par. It could be 19 over par. I really don't know. Well, that's very inconsistent, and you're not improving. So here's what I'm trying to say. First of all, you're measuring, okay? But notice the confidence is from the measuring and knowing, or at least believing you know the outcome. But you also got this from the consistency, from only trading bottoms that have reversed, or only trading tops that have reversed. That's the consistency. And that leads to 70% of the time in this situation you make money, so you trade as much as you possibly can in situations like this because you know you're going to make money, but to do that you have to have some level of control. And I would guess most of you guys just sit down and fire off a bunch of trades, pa-chow, 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 and have no control. And I just don't know how that can lead to confidence because you'll be very, very inconsistent. And so you'll have a market that's inconsistent and you'll have a trader that's inconsistent. So do the math for me. How can you take an inconsistent market and an inconsistent trader and create something consistent? You cannot. There is no such math. It doesn't exist in the universe. So one of you has to be consistent. One of you has to be consistent. And it's not going to be the market, so it's going to have to be you. You must take control. By the way, I put this in my book 20 years ago. It's not new news, but you might find that you're in this situation where it's a wake-up call. The fish are jumping in the canoe. Okay? Okay? Don't let this opportunity slip through your fingers. Okay? Don't let this opportunity slip through your fingers, guys. Okay? By the time we hit July, you'll be bitching and moaning that the markets are too quiet, there's no volatility, trading's dead, all this kind of stuff. Well, Axel says biggest mistake is changing time frames too much. So let's do it this way. So I'll use this this chart here. Okay? All right. First thing is, fundamentally, am I a bull or a bear? Okay? That's it. Fundamentally, are you still risk off? Did the United States do enough to turn the entire global market around? The answer is no. You believe there's still risk in the market. You still think that there's more virus going to spread, more economy is going to get shut down. Then you're a bear here. So where does a bear sell? Right here, by the way. Dude, so obvious. You need to know how to trade. That is like the most important line in the sand. You have to know that. It's like, right, last month, guys, you should have sold here. By the way, I did sell there. I sold way up here, if you remember. Okay? Remember, I sold this on January 1 or something like this. And I just got knocked out recently. But anyways, what is this, a month? Last month, that was the sell. No, last week. That's last week. Last week, this is an obvious sell. If you know how to swing trade, that's straight up sell. Plus, if you were a bear, that's just straight up in your face, high flying, death defying, 360 slam dunk sell. You have to know this. It's called swing trading. And by the way, here's the target. Yeah, boy! Wait. I thought the world was ending. I thought the sky was falling last week. No, apparently not. Okay? And so here we are now. If you were a bear here and you were a bear here and you're still a bear now, this is what you're supposed to be doing. So we're done with this time frame. We're done. I'm done now. I'm done for the rest of the week. I know it's Tuesday. I'm done. I have no need to look at this anymore. Because I know game on. You understand? Game on. Rule, permission to engage. Thank you, Overlord. Engaging. Great. So now you drop into what? 15 to 5? Whatever. Okay? So here's my tactical plan now, guys. I can do this all day, every day. I just got a lower low off resistance. I'm gonna sell off this roll reversal all day long. Got my fingers on the trigger, right? Got my hands in my pocket, got my fingers on the trigger. So Peccary says, so from now on, maybe short day trades on this bear? Yeah, that's how you trade, man. That's how you trade. That's what trading is. Yeah, you got it. And if the market is no longer bearish, should you keep selling high? No, you don't sell high. Think about that. You don't sell high. You cannot sell high. It's not in the rules of engagement to sell high. No, I know. You got it. I'm confirming. Yes. That's exactly right. Okay? If you're up here, do you sell? No, you don't sell higher highs. You sell higher lows. Well, we just made a lower low. Right? You see what I mean? So you're like, wait, I'm a bear. It just made a lower low off resistance. What do I do next? I know I sound facetious, but I'm trying to stir up some emotions, guys. You got to get in on this. If you're a bear and you know how to swing trade and you just kicked off the most obvious selling pivot and then it made a lower low, predict the future. You're a bear, for crying out loud. What's going to happen next? What's the future? You're a bear, it made a lower low. How about a lower high? Sounds good to me. So where would that be? Oh, I don't know. At resistance? Yeah. Could be, right? Could be. A rabbit could be. You see? Guys, you got to take the bull by the horns or the bear by the claws or whatever. You got to get your planning legit. Okay, guys, you've got to take total control. Stop just trading. Okay? Stop just throwing down trades trying to get rich quick. It's a fool's errand. Become a professional. Show me your plan. Put it together. Are you a bull or a bear? Why? Are the market conditions bullish or bearish? So if you said you're a bear, and then we kick off this bearish pivot, OMG. You got to get in the game, bro. You can't be reactionary. You should have waited a whole day for this. And by the way, you don't have to sell up here. That means you were perfect. I'm not asking you to be perfect. But if you're a bear, oh my gosh, you better be on a small time frame ready to go. Hot to go, HOTTOGO. Well, Benjamin, your plan, my plan on this Kiwi Swiss franc has not changed since January 1st. So it doesn't take a lot of my time. Okay, Benjamin? That's my strategy. So think of it this way. Let's go back to that, let's say a 4-hour chart this time. Okay? You understand? Since January 1, and by the way, I told you in August that I'd be a bull until January 1st, and then from January 1st, a bear. How many people can confirm that? I told you in August, my plan was this pair would go up, and then starting January 1st, this pair would go down. Okay? 6 to 9 months in advance. I know, right? So, like, I just don't buy it when people say, I don't have the time, or what? You're like, what are you talking about? You don't have the time. So from that, imagine this way. Imagine it this way. Because I'm just trying to connect with different synapses in your brain. In this period, I'm never selling. Do you understand that? I'm not looking for selling. I'm not looking for resistance. I'm not taking short-term opportunities. I'm just long and strong. And up here, by the way, do you remember? You guys remember I looked like an idiot because I took profit 3 weeks early. Do you remember that whole period? I got out 3 weeks early. Why? Because I told you I would. I told you I would. And then something happened in the market technically, and I'm like, that's it, I'm out. It's a bit early, but I'm out. It's not my fault. The market did what it did. I'm out. And for 3 weeks, I looked like an idiot because it went up another 150 pips or something. Right? You remember all of that? And then it looked like, oh, Wayne, you gave it all up, man. And I'm like, well, you know, it could fall now, it could fall but later, but I know it's going to fall in January. Boom! Okay? So my point isn't that I was right. Of course, I was right. The point is I had a plan and I know what I want to do before I do it. And being right or wrong is irrelevant. Okay? Being right or wrong is irrelevant. All it does is tell you whether you're selling at resistance or buying at support. In the fundamentals course, actually in the day trading course, we talk about this a lot, about the universal truth of trading. If all you did was buy at support in an uptrend, or if all you did was sell at resistance in a downtrend, you would be profitable. That's it. How many people here would agree that that's a universal truth? If all you did in this downtrend was sell at resistance, you'd be profitable. Right? So I'm not picking on whoever made the comment earlier, and I know it's emotional. I'm trying not to be emotional or be mean. But to the person that mentioned they missed all of this in March, I'm like, whoa, 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 why? Why? Right? You must have been buying in a downtrend. Well, that's impossible. Because I'm the best, Cabifer. Because I'm amazing. Because God speaks to me personally. No, dude, it's my analysis. Fundamentals, there you go. It's your job to know. Yeah. And honestly, I told people 6 months in advance. Put it this way, it's hard work. I worked really, really hard for 20 years. And I developed some sort of skill. All right? Like, okay. And by the way, if I was wrong, it still would have worked out fine. Okay? The point is, guys, is the consistency. Only selling at resistance in a downtrend keeps you out of lots of bad trades. See, the way that I think is it is impossible to be a buyer in a downtrend. That's all right. Sit here for 20 years. I've been doing these YouTube webinars and other webinars 20 years. Okay? So hang around. Anyways, the way I think, and maybe this is helpful, is that it's impossible for me to buy a downtrend. It's impossible. The only time I'd buy a downtrend is I believe, technically and fundamentally, we've hit bottom. Okay? But I don't buy downtrends. I sell downtrends. I'm not trying to outsmart the market. I'm not trying to outsmart anybody. And I want you to think about it that way too. You are a cork in the river of Forex. Benjamin wants to be an expert in the oil industry. First of all, spent a lot of time on OPEC and EIA websites and IEA websites. And you want to read The Prize and The Quest. So those are going to be books that are going to go into my book club. The problem is, I think those books are like 800 pages each. Now, I read each one of them in a week. Harvard is a bitch, man. It was in that course it was 2,000 pages of reading and 16 papers in a semester. I mean, just ridiculous. But I learned a lot. Okay. Oh, you got The Prize? Yeah. Is The Prize before or after The Quest? One of them's first. Yeah, Daniel Jurgen. Yeah. So this will be a book we read in the book club. Oops. Sorry about that. This is a book we'll read in the book club. Okay? Now check this out. Here's the problem. Oh! I read this in a week. There's only a few pictures in the middle there. I read this in a week, guys. So I have a feeling if we start a book club and I'm like, read this month, nobody will read that, even in a month. Okay? That's tough reading, don't you think? But you will be, if you're in the oil industry, especially as an analyst, you've read this. You could drop a Jurgen quote with your oil trading buddies, and they'll know it. Like, you cannot be a professional and not know this. Okay? Okay, everybody knows Jurgen. Okay? So anyways, and then, by the way, this is just one book. There's another book. And I don't see it. I don't know where it is. I don't see it. I don't know where it is. I've bought like $10,000 in books thanks to Harvard. Right? You know what's really good is trading economics. Yeah. Cool. So anyways, I hope I made my point, guys. You got this if you change your behavior. I don't think most of you, I mean, if you're new, you need to learn, right? But I think most of you have enough trading intellect. You know technicals enough, but that's not the problem. So I'm asking you to really mentally change your behavior. You have to think differently. If you're going to trade differently, you need to think differently. So, I was using the analogy of golf, where you just go golfing every single day, year after year after year, and you're not going to be significantly better of a golfer. I've seen it. Many people have golfed often, consistently for 20 years, and they're not much better. You could sit here and not get much better. Sitting here and trading is not going to make you better. You're just reinforcing bad habits and stuff. And I think you believe me with the golf analogy. So how do you become a better golfer then? You practice very, very, very specific things until you've mastered them. And by the way, if you don't know how to aim, it doesn't matter how hard or how far you hit the ball if you don't aim properly. If you don't hold your club properly, okay? The ball's just not going to go where you expect it to go, okay? And then before you start hitting a big club and seeing if you can hit 300 yards or not, you should probably work on things like a 6-iron and a pitching wedge, and work on that. Maybe for a year, every day. Okay, every day you work with your pitching iron, your pitching wedge, and you get really, really good and consistent on the shorter shots. Okay, the easy stuff. And then you can hit the green and let it bump and run and all that kind of stuff. And you get pretty okay around the greens until you're very comfortable with these short irons. And then don't worry about it. You don't have to hit 300 yards to be a good golfer, okay? But I want you to really break it down very, very, very specifically. Work on very specific things, okay? And remind yourself, write it down. I keep telling you, write it down. Write it down. One of your goals is to be consistent. So pick something that you're going to work on and consistently do it. Because you know the consistency is going to be a requirement of your success. So find something, anything in your trading, and get very, very consistent. Sure, we can do gold. Sure, let's do gold. Just wondering if we should do this on this chart or not. Okay, so okay. Cool. Well, it flipped on our reversal pivot in something I measured yesterday as an uptrend. What do you think, guys? This is a heck of a coincidence, huh? Oh, sorry. Forgot you were looking at moi. Amazing coincidence, huh? In something just yesterday we measured as an uptrend. We just did all of this. Huh. What's the trade plan for the week if you're a swing trader? Swing traders buy it right here, and this is the target. So if you're a swing trader, you are already done for the week. Okay? And there might even be a counter trend that you can see. Okay? So if you were a swing trader, guys, you're done for the week already. Okay? That is a very, very obvious, buy at 1500, trade. And the target back then was 1538. Is that right? 1615? Now you'll say, well, that's an interesting coincidence. Yeah, you actually knew that last week. Isn't that amazing? So let's say on Friday, you would have known that Monday was going to open in a buy zone, and you're in an exit zone for bears. And if you found a way to buy it at the open, your target would be 16.16. Okay? This is what I mean by if you log into your trading account and you look for trades, you're not going to be consistent and you're likely to fail. Statistically speaking, you're going to fail. And the reason for it is on Friday, you should have been planning Monday. So if you show up to Monday and we're already up here, there's no way you're going to buy it at resistance. And then you've missed the whole thing by the time it's happened. Well, the problem is you're showing up on Monday looking around for something to do, where the trader that made money planned it out on Friday and took the shot when the market opened. So by the time they log in on Monday, we're already way up here. And by Tuesday, they're done. That was a whole week. Good job, everybody. Oh, but it's only $100, right? It's only $100 on gold. Well, but that's the difference, guys. That's the difference between a successful trader and a not successful trader, okay? On Friday, you were supposed to be planning on Monday. I mean, you guys hear me say this all the time. Today's Tuesday. You should be planning Wednesday's trade. Today's already done. You can't log into New York and what are we going to do today? We're already taking profit for today, bro. We're on tomorrow. We're so on tomorrow. Okay? So again, we need to change your mindset and your behavior. Okay? So I gotta go because in an hour and a half, I'm meeting with the swing and day trading group. We need a different name for it though, don't we? The COVID-19 group. So how many people are gonna join me at 11 o'clock and do the London close? Remember, I'm adding 40 hours of my time per month and including the day trading course and all the trading tools for no extra money. I'm not even charging any money. Well, you have to join the group, but the group 3 months ago meant 4 hours a month. Now I'm giving you 40 hours a month and there's no difference in price. Do you understand? Swing.fxbootcamp.com. I've included all those extra things for no additional cost because I'm trying to be here to help you. Okay? I'm trying to be here in a time of need. Okay? I'm sure 40 hours of my time and 2 training courses must be worth something to you. What would someone else charge? If I was a marketing genius, a trading guru, what would I charge? A couple $1,000? So join the swing trading group and I'll work with you twice a day, every day until June 1st. Okay? This is a little bit of money, guys, but it's the same amount of money 3 months ago when it was just meeting an hour a week. Okay? Okay? So 10 times more value, and I did not change the price. And the price is not high, guys. It's not high. You'll go, oh, really? Well, oh, that's not bad. It's already cheap. What happens after June? I don't know. Okay, I don't know. All right, guys. I'll see you at swing.fxbootcamp.com. Thank you for being a member of the Forex.Today community. Thank you to Traders Way for making this possible. Thank you for your commitment and time and focus and energy and questions. Thank you for subscribing. Thank you for leaving comments. Thank you for the hard work and seriousness that you put into this. I'll either see you over at the Swing Trading Group in 90 minutes. And by the way, the Swing Trading Group's going to meet in Asia as well. So if you join, I'll see you at the Tokyo Open so we can front run the London boys. There's all kinds of awesomeness on our way. And if you can't afford the little bit of money, fine. I will see you tomorrow here at the free